Hey y'all, welcome back to a new video. This one's gonna be on RECO, ticker symbol RECO, and American markets recap. And this is gonna be a ticker which I think is the last real oil play left in the world. And I will explain why shortly. You guys can probably tell that the sound quality's gotten a lot better. It's because your boy got a new mic. And now I'm going to start pumping out videos. No more excuses left. But this one is a big one, and I'm going to be buying a significant amount of shares come Tuesday. But let me explain why. Alright, so as you can tell, RECO is an oil company and probably the biggest oil play left. And before you guys go punch the dislike button saying oil's dead, and EV's the future, I do admit that the oil industry has been kicked in the teeth the last few years. The biggest threat being the world's transition to electric vehicles. Yes, transportation accounts for nearly 70% of the world's oil use, and yes, countries around the world are already looking to ban sales of traditional gas and diesel-fueled cars. That means these fossil fuel vehicle sales bans will have an important role to play in curbing the world's appetite for the black gold. So in hindsight, oil is dead, right? Wrong. These countries are overlooking that the target is to ban the new sales of fossil vehicles. So in layman terms, any pre-existing fossil fuel vehicles will continue to be used. That means the world still needs a lot of oil. The decline of transportation isn't the be-all and end-all for oil. There are still other vital oil byproducts that the world still needs. And oil is used in everything. Oil is used in everything: construction, clothing, furniture, toys, medical devices, roads, household items, the list goes on. It's even heavily used in electric vehicles, as nearly 50% of the modern day electric vehicle volume is made up of plastic. So in short, oil is an integral and essential piece of everyday life. Even if cars of the future are still running on electricity, they will still be built on the black of oil. And this is the key. I'm not saying that we are not going green. Yes, the world is going green, but it's not as green as fast as everyone thinks. Oil companies see the writing on the wall. Triple-digit oil prices are things of the past. So it's crucial for companies to make sure that any remaining production they invest in is low cost and economic. And if they can hit those two parts, then oil companies will continue to be profitable, and very profitable, as I will show in the coming slides. So before we got into RECO, we need to know a little more about oil. How is oil? What are the types of oil, and how do companies profit off oil? Because there are two very large scopes of oil. The first type of oil is conventional oil. This method is very prominent in the Middle East, and essentially it is that you drill a hole in the right place and oil comes gushing out, like money. It's money flowing out of the ground. The last century has been the golden era of conventional oil production. Now nearly 2/3 of the world's remaining oil reservoirs are in the Middle East. What makes conventional oil appetizing is that they are very cheap to run. For example, Saudi Arabia's Saudi Aramco averages a cost of $2.80 per barrel. And yes, when oil was going for $100 a barrel, it had about a 50x markup. Right now, let's say oil is going for $60 and making 30x markup. So give me a biotech that has 30x markup. None. And that's the beauty of conventional oil. It is literally a flow of money. All right. But there's another side. There's the unconventional oil. And simply put, unconventional oil is any kind of oil produced by a method other than traditional oil. Since traditional oil is the easiest form of extraction, unconventional oil is very expensive and complicated. For example, in the Canadian oil sands, it costs up to $60 a barrel for new operations to break even. This is a joke compared to the $2.60 of Saudi Aramco. Unconventional oil is often linked to high oil prices, where the cost can be justified by even higher oil prices. So for example, if it costs them $60 to get a barrel of oil, then selling it for $80 is justifiable, right? As we already know, oil prices may never recover to levels seen before, and so unconventional oil has now become unaffordable. Therefore, they will start closing down, and this has already happened. A lot of these oil companies have leveraged debt, and now they're realizing that oil will never really come to where it was before, and they're going to go bankrupt. Thus, the supply of oil will also decline, and only conventional oil suppliers will be left. So, how does this connect to RECO? Well, conventional oil field discoveries have become extremely rare in the past few decades, but when the right one hits and a bonza well and reservoir, it can skyrocket the share price and make shareholders a fortune. And now, welcome to RECO. So, why RECO? Africa is oil's final frontier, and 2021 could be the start of the oil FOMO. Africa has been underexplored through most of the 20th century. It currently holds only a little over 7% of the world's proven oil gas reserves, despite representing over 20% of the Earth's total landmass. Much of this is contained in just a handful of the most well-developed Africa's oil-producing countries, such as Algeria, Egypt, Nigeria, Angola. And when oil is discovered in Africa, a stock really skyrockets. Take Africa Oil, for example, a stock that returned early investors over 10 times their money back in 2010. Africa Oil was a small exploration company backed by one of the most prolific financiers in the business, Lucas London, right? So we can conclude that when you hit oil, the market pays attention, and this is the key. Uganda, for example, has 6.5 billion of proven oil reserves, and Mozambique has 100 trillion cubic feet of proven natural gas reserves, the 14th largest in the world. But the problem with these countries is that these countries are not the safest nor the most stable countries in the world. And this is where investors get shy. They don't want their money locked up in somewhere where corruption takes precedent over sales, over money, right? But there's another prospective oil producing country that's one of the least corrupt countries on the continent, beating out Algeria, Angola, Egypt, Nigeria, and even South Africa. And this is where RECO is. So, welcome to Namibia. Yeah. I've never heard of this country until today, but doing research, man, everything is lining up. So, welcome to Namibia. Namibia is right next door to Africa's number 2 oil producer, and doesn't have any proven oil reserves yet. Weird, huh? It's not weird, because it is undiscovered. Namibia already has world-class infrastructure and ports from their strong history in the mineral sector. This is because Namibia is the world's 4th largest producer of uranium and in the top 10 in diamond production. Roughly 1/8 of Namibia's GDP comes from mining. So you can say that this is a very naturally resource-friendly jurisdiction, and this is why, being beside Africa, already having like resources and being a good country, so you can see that the dependence, exporting and commodity being 1/8 of Namibia's GDP, you can say that they will be very happy to have more people, because it's a very high, like they really need more more money exporting to really grow the company, as long as they get their fair share. So they have 2 large ports to ship products to international markets. They have a very stable political jurisdiction, well-developed financial sector. The democracy of its government is ranked ahead of many countries generally considered safe investments like Mexico and Thailand. Much of Namibia's tax revenue comes from its mining industry, so Namibia knows how important maintaining a transparent, consistent regulatory framework is. So investors' money is safe. All of this put together has drawn several oil and gas major companies into Namibia, each hoping for a piece of the prospective pie. Companies like Shell, ExxonMobil, and Total SA have all had to scoop up second-tier exploration blocks in the country because the best prospective oil and gas asset in Namibia was overlooked for a long time by these multi-billion-dollar majors, and now they missed their chance. But the one who didn't look it over is starting to grow. And this is where we introduce RECO. So welcome to RECO. RECO, or Renaissance Energy Africa, or Recon Africa for short, is a junior oil and gas producer that has set themselves up for success. A company that got earlier access to Namibian government geological survey and were amazed by what they discovered, and they saw what I highlighted above. Once they realized such, they knew what they had on their hands, and they began scooping up all exploration blocks on site. In fact, they now own 6.3 million acres of onshore land. Yes, onshore land. Today, the desperate search for conventional oil has led the major oil and gas giants to Namibia, a desperate attempt to search for the last remaining unexplored low-cost oil production left in the world. This is because RECO bought 90% of all the land that you could develop on. But Recon Africa beat them to the punch and stole the best asset in Namibia out from right under their noses. Not to mention, the company has already started drilling and expect additional survey news within 2 months. If the results are strong, then not only will the stock explode, but Recon Africa will be in position to look for joint venture partners on their team, or perhaps even field buyout offers. So, what do people say about RECO? A globally renowned geochemist, the Cavanago Basin, which RECO owns, could potentially hold 120 billion barrels of oil in just 12% of the project. You see, this company is a junior developer, meaning the share price is around $4 right now. It's around $4. The CEO himself said, "I've never seen a play like this in my career. It's stuff of legends." Okay. And it wasn't just a coincidence that RECO found this amazing land, and it wasn't a coincidence that they bought the exact right part, and the way they're growing, it was just not a coincidence. It's because a team is only as good as their people. And as I will show you, this team is a team made up of legends. And it wasn't a coincidence that they just stole probably the best oil play in the world. It wasn't a coincidence, and I will explain why. All right. As I said, a company is only as good as their people, and Recon Africa has a team of people that have made significant money in their deals for shareholders. And let me go through them, and you will be too bullish. Too bullish. All right. The first one is our boy, Craig Stenkeen. He's the founder. The Recon Africa story begins with a private company owned by Craig Stenkeen, a 25-year veteran of the global oil and gas industry. Specializing in large-scale new play development, he knows how to make money for his shareholders. Craig sold his previous European oil company to San Leon Energy for $139 million, where early shareholders made over 360% returns. Craig was the sole shareholder of Recon Africa for years, and he brought in world-renowned geochemist Dan Jarvie to look through a global source rock report for promising targets in Namibia. Looking through historical drilling and recent aeromagnetic data, they realized that an area of northeastern Namibia known as the Cavanago Basin had all the indicators of a massive sleeper oil deposit. Since RECO was the first to this area, it captured a 90% interest in a massive 6.3 million acre land package. Yes, they got 90% of the Cavanago Basin. The collapse of the oil market in 2014 put further development of the project on hold until 2019. That's when Recon Africa completed a RTO, a reverse split takeover, to go public. They brought in an eager and experienced management team to blueprint and the explorational project. All right. So as we know, our boy Craig knows what he's doing. Next is Jay Park, chairman of the board, with an extensive experience working in the oil gas industry in Africa. Jay is a perfect fit for chairing Recon Africa's board. Jay has advised petroleum companies in over a dozen African countries over his nearly 4-decade-long career, Namibia included. Notably, he was a director of Caracal Energy, which was acquired for 1.3 billion by Glencore back in 2014. So we already have a guy on the ground who already has the connections to make everything possible. He knows how to get the infrastructure, and that's the biggest challenge in countries like Namibia, how to get infrastructure. But this guy's already done it, right? So we don't need to worry about that anymore. The next guy is our boy Scott Evans. Scott comes to Recon Africa with a jewel-studded resume. It includes stints at companies like Exxon and most recently Hamilton, where he was a VP of their integrated asset management and technical consulting arm. All right. And then we got Nick Steinsberg, who is the VP for drilling and completions. An expert in a well-designed and completions, Nick pioneered the techniques that first made the gas in the Texas Barnett resource play economically viable on a large scale. Nick was the man who oversaw the completion of the first horizontal wells ever drilled in the Barnett Basin. This single-handedly kicked off the rush in the area. His consulting firm has become globally recognized as an authority in his field, having managed drilling and completing over 1,500 wells. Recon Africa's management team is a star-studded lineup with well over a century's worth of collective experience, much of it focused on development plays in Africa. So if you wanted one guy, just one guy, to run a drilling operation, and you wanted the best, the LeBron of drilling, this is the guy. And why would this guy, where he could go to basically any oil gas company, come to Recon? Just think about that. All right. Next up, we got Dan Jarvie. Dan Jarvie was one of the original geoscientists that helped locate the claim in Namibia. He's a world-renowned geochemist who's analyzed and interpreted petroleum formulations all over the world. He was one of the primary drivers behind exploration success on the Barnett resource play and former chief geochemist for oil and gas majors. Which is such a star-struck lineup. What exactly is it about Namibia's basin that has attracted such a lineup, right? You can have one, you can have two, but you have like the best of the best. And this is stuff that I saw in VBIV, and this is why VBIV will also be a great company and get bought up for a great amount of money. I could bet my account on that. And this is another one, right? I'm giving you guys plays that took me a long time to find. This was 2-3 weeks of DD, of due diligence, until I found this, put this all together. But I'm not done, and I'm gonna keep giving y'all these plays, and I'm gonna keep talking about RECO because it's now an 18-minute video, but if you're gonna put 10, 30, 40K into something just off of one 6-minute YouTube video, you're crazy. You need to know everything, right? I don't want to be putting my money just because, oh, Ray recommended it. I want you to know why you're buying it, what makes it great, right? So when it dips, you see it as a buy opportunity and you don't panic. You say, oh, it's on sale. So let's talk about resources. Recon Africa claims in the Kavango Basin has 6.3 million acres in Namibia, and as well as an additional 2.45 million acres in neighboring Botswana. The total land package of 8.5 million acres that covers almost the entire Kavango Basin, which 12% is said to be 160 billion barrels of oil. Just to put that in perspective, this is still a $4 stock. All right. A great comparison of Midland Basin is so to compare Midland Basin to something, right? To another to compare Cavagano Basin, to another play, we can look at Midland Basin. Um, to kind of get the valuation of Cavagano Basin. Located in West Texas, the Midland Basin has a similar mix of conventional and unconventional oil to the Cavagano Basin. Conventional oil produced began in the Midland Basin back in the 30s. Peaking in the 70s. In recent years, however, the conventional oil has started to run dry, and now the production has shifted towards unconventional oil in place. Though the Midland Basin is only about 4.7 million acres in size, the total value of the Midlands basins, including both past and future production, has been estimated at 540 billion. All that oil in a basin, just half the size of the Cavagano Basin. And Recon Africa owns 90% of Namibia's portion of Cavagano Basin, with Namibia's state oil company Namcor holding the rest 10%. The company owns all of the Botswana portion, though Recon Africa has 50% farm out option. Factoring all that in, Recon Africa's net acreage in Cavagano Basin ends up about shy of 6.7 million acres. So compared to Midland Basin, which had a valuation of 540 billion, this can be considered a bigger play, right? And Recon Africa owns 90% of that. You guys realize how big this play can really be? Alright, let's get into some more detail. Pictured above, Dan Jarvis himself provided an estimate for the total resource potential of the Cavagano Basin. For conversion 12%, for conservative 12% of a slice of Recon Africa's total land package, Dan estimated between 66 to 120 billion barrels of oil equivalent contained, with the range dependent on the exact thickness and conversion rate. That's potentially 100 plus billion barrels of oil generated in just 1/8 of the Cavagano Basin. To understand just how large this number is, the total crude oil reserves of the U.S. currently stands at just 43.8 billion barrels of oil equivalent. Of course, not all of the oil in the Cavagano is recoverable. That would be enough to send Recon Africa's, even if just 1% of the 100 billion barrels is recoverable, that would be enough to send Recon Africa's valuation soaring by multiples. This staggering potential outlines just why Cavagano Basin has been favorably compared to major oil producing formations like Eagle Ford or Midland Basin, just because of that sheer size. Dan Jarvis' expertise as a geochemist is respected worldwide, and here's what he had to say about Cavagano. We could even be looking at the last major onshore oil discovery on Earth. A fellow member of Recon Africa's technical team, Bill Cathy, agrees. Nowhere in the world is there a sedimentary basin this deep that does not produce commercial hydrocarbons. With the petroleum resource potential of the Cavagano Basin clear, the question then becomes, how does the company plan on continuing the results shareholders want to see? Because at the end of the day, we kind of just want the stock to go up, right? So how are we gonna take advantage of this jackpot? And that comes to operations. Recon Africa is focused on the low-cost, high-return conventional oil resource in the Cavagano Basin. So just so you guys, just for a quick reminder, conventional oil is oil that is very cheap to produce and has probably the highest profit margin in any product, except for software. This oil is, you can drill it for about $2 to $3 and you sell it $60 to $100, right? Crazy profit margins. So how are they going to do this? So basically, Recon Africa wants to know how many barrels of easily accessible oil they're sitting on, right? Because that's where the profit is, like I said. The company recently acquired a brand new Crown 750 mobile rig, which I put on the left, pictured below. This 1,000 horsepower rig is rated to drill to 12,000 plus feet, and its purchase is expected to reduce future drilling costs by 60%. The rig arrived in Namibia in December 2020 and ready to begin a fully funded 3-well drilling program, with the first target being drilled right now, right? So it's already happening. And thanks to the twice upsized private placement for $18 million US completed last August, the company has plenty of cash with no debt. This means they'll be able to keep the drilling rig turning for quite some time to come, right? There is also, this is big, a paved road runs directly through the project area linking Namibia's capital city of Windhoek to Botswana. A railroad also to Walvis Bay, Namibia's second largest city and a major logistical deep water port with existing oil storage terminals, lies just 140 miles away. In addition, there are plans for the construction of oil refining facilities at Walvis Bay. That would provide easy access to the markets like neighboring South Africa, which is ranked the 29th in the world for oil consumption and needs to import 60% of its oil to meet demand. So they already have, so the biggest problem, other than bad political issues and that stuff, is infrastructure. They have all of it. They have a paved road, they have a railroad, they have water, right? They have all of it. Us to the future. Success at this stage. Success at this stage. The first 3 wells will lead to further expanded exploration programs in 2021, 2022 to 2022. And remember, the results of these first 3 wells are expected in just 2 months' time. This future isn't very far off. If this is the key, if Recon Africa discovers commercially viable oil or gas, the company will be eligible for a 25-year production license. Lastly, given the vast size of the Cavagano basin and Recon Africa's large controlling interest in the asset, they're in a strong position to bring in strategic partners on their own terms. With several oil and gas majors and super majors already having established presence in the country around Recon Africa, because Recon Africa really got the whole pot. Recon Africa will have no trouble finding potentially interested partners in proximity if the drill rig delivers the right results. And as I highlighted before, it is like an 80% chance that we get very favorable results, and that is very good profit to loss ratio. So lastly, we get to investors. Recon Africa share structure is sound. Considering the asset they have in place with just 107 million shares outstanding, there's a sizable amount of options and warrants, and this can provide more working capital to the company down the road as it prove out the resource. Also, there's skin in the game. Insiders and close associates own over 25% of the company's share. One of those close associates, Craig Stenkeen, the original founder, still owns under 10% of the company. The last private placement, closed in August 2020, was originally announced at $6 to $10 million Canadian raise. Due to the major interest, it was first upsized to $20 million, then again to $23 million. This got the attention of some analysts, which further added to the overall investor interest. The financing was twice oversubscribed, proving that oil exploration was in big demand. The company has no debt, and its current drilling program is fully funded thanks to the cash position. All right, last but not least, triggers. The company wants to confirm an active hydrocarbon system in place, as well as identify the conventional resources available in the basin. Recon Africa's current 3-well drilling campaign is the next major catalyst. Result from those wells are expected to come out in late March or early April. The first has already spudded, and the company is planning to release the results of all 3 in a single press release as soon or as late as March or early April. And as mentioned earlier, a buyout isn't completely out of the question either. Recon Africa still has plenty of cash on hand to complete the drilling program, and with a massive 8.5 million acre land package, the company has plenty of promising targets to choose from. This is an early stage exploration play and high risk, high reward scenario. It is an unprecedented feat for junior oil and gas explorers to pick up a land package of this size So it's literally unprecedented to pick up a land package of this size, assembling such a talented team and technical team, and then having people all around you, big corporations all around you, trying to just like begging for land pieces around you. And then on top of that, having the infrastructure to literally do as much drilling as you want. So, in opening up the Cavagano Basin, Recon Africa has evolved into the highest impact onshore oil and gas play in the world. That might be part of the reason why so many petroleum industry superstars have jumped on board. They too know that their time is almost up. They want to go out with a bang and have aligned themselves with what could quite possibly be the only big win left for oil and gas, right? They're already preparing for the big leagues and are looking to deliver the grand slam to the markets that the markets have been waiting for. So, price targets on good data, on low, like very minimum target is $20. I see this on good data going to 30, and to be very frank, I feel like Exxon or something would just buy this out because they have more to gain than to lose. On bad data, probably see $2, probably even $0, whatever. Because why? Why is the risk to reward so high? So currently the share price is trading about $4 Canadian. If we go to $5, we see that's about $500, 500%. If we go to $20, we see about 500% gain on our money, and if we get bad data, we lose about 50%. Right? So that's our risk to reward. Our risk to reward is about 5 to 1. Right? Or no, that's more than 5 to 1. You make five, whatever, five to 0.5. All right. Then we want to look at what is our chances of success, right? So like in biopharma, you look at your data. In here, we can see this. We can see the team. If they saw something bad, they would have just dipped, right? This team can go to any company they want and they will get jobs. So the team is solid, the data is solid, and most importantly, people around them, the big guys, know that they got left out and they're buying stuff around them. That is a clear indication that they're sitting on something big, right? So that's just all I wanted to say. I hope you guys liked this video. And yes, the video is long, but this is DD, right? This is due diligence. I'm not going to give you guys a 6-minute video telling you why. I want you to know why you're buying it, why I see it. And if you see a dip, I want y'all to be buying that stuff up. All right. It's been fun. I hope y'all like the new mic. Please share it around. Shout out to Kevin, my boy. And that's it. Thanks and peace.